Imagine opening your phone to a video message from a trusted financial analyst. They greet you by name, reference a specific currency pair you posted about yesterday, and offer a guaranteed trade. That analyst is a deepfake. The hyper-specific details they mentioned were scraped from your public social media and data breaches to engineer the bait. The old warning signs, bad grammar, or obvious Ponzi schemes are gone. Scammers now use sophisticated language models to craft perfect, localized pitches. Relying on gut feelings to spot these threats is dangerous. Often the trap only becomes visible once the broker stops responding to withdrawal requests. Protecting your capital requires knowing how these operations work. Let's break down the precise anatomy of a modern Forex scam so you can verify your broker before making a deposit. The trap usually opens with authority. Scammers deploy convincing video replicas of prominent brokerage CEOs or famous traders to lower your guard. But these algorithms have tells. Look closely at their blinking rates. They often move too slowly or freeze. Watch the edges of the face for digital blurring, and listen for slight delays in the audio sync around the jawline. Even if the video checks out, the illusion extends to their platform. A slick website means nothing if the URL lacks an SSL certificate. Run a whois lookup on their domain. A broker claiming a decade of experience with a 3-month-old website is a major red flag. The only way to verify a broker is through regulatory data. Find their claimed license number and cross-reference it directly in a top-tier regulator's public database, like the UK's Financial Conduct Authority. If they aren't on the official register, they are not regulated. Skipping these technical audits means you are depositing funds into a system with no legal accountability. Once you engage, the scammers play a patient game. They don't demand deposits right away. Instead, they spend weeks building rapport, chatting about your family or your long-term trading goals. Pay attention to how they talk to you. A legitimate firm uses secure client portals and official email. If an account manager constantly pushes you toward unprofessional channels like WhatsApp or Telegram, they are likely hiding their tracks. Then comes the proof of concept. They'll set you up with a demo account where every trade executes perfectly with zero slippage. It's a rigged simulation designed to guarantee profits and build false confidence. Over time, this calculated routine strips away your natural skepticism. They replace your critical thinking with trust, setting the stage for the theft. The mechanism keeping your money safe is the segregated account. This ensures your deposit remains separate from the broker's own operational funds. If the firm goes bankrupt, your capital remains yours. But scammers mix your money with theirs. Depositing is always smooth, but the reality of the trap reveals itself the moment you try to withdraw your funds. Suddenly, you hit a wall. They demand the same identity documents you already provided. Then comes surprise processing fees. Finally, they claim you can't cash out until you meet impossible trading volume requirements tied to a deposit bonus. By the time you realize what's happening, the communications usually stop. Once your capital sits inside an unverified, non-segregated system, there is no regulatory lever available to force the return of your funds. If you suspect you're caught in this cycle, cease all contact immediately. Ignore their urgent calls, ignore their threats, and never fall for promises to fix the issue if you just deposit a little more. Document everything. Take screenshots of your entire account dashboard, save every chat log, and download all transaction records before they lock you out. Next, trigger financial countermeasures. Log an official request to pull all remaining funds to create a paper trail. Then, call your bank or credit card provider, explain the fraud, and demand a chargeback. Take your evidence to the regulators. File a formal complaint with the financial authority the broker claimed to be licensed by, such as the CFTC, and alert your local regulatory bodies to aid their investigations. Swift, documented action is the only way to intercept your money and mitigate the damage. While AI creates the illusion, scammers ultimately rely on the universal triggers of greed and the fear of missing out. Maintaining a rigorous checklist and a disciplined mindset provides more protection than any security software. Treating every promise of guaranteed profit with skepticism is how you survive the market. Legitimate trading is a marathon. It requires operational transparency, regulatory compliance, and institutional-grade technology that works for you. Protect your capital and trade on a foundation of trust. Visit FXNX.com to access secure platforms, zero point zero pip spreads, and the educational tools you need to fortify your trading against future threats.